indicators about FX trading. As a trend trader, there are 4 key technical indicators you need to know and you need to understand, and those are what you're going to be using to build your trading bias, and which is basically going to help you become profitable overall. Now, before I proceed, I would like to first of all touch base on just basically go over the key tools that I told you guys on, and how you should basically use them in the future. First things first, remember when I spoke about price action. Price action basically talks about the direction of the trend. You want to first of all observe this market making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and so on and so forth. So if this market is making higher highs and higher lows, okay, ladies and gentlemen, once we're done identifying the trend, which is the first thing you want to do, identify the trend. Once you're done identifying the trend, strike one. The next thing you want to go and do is you want to bring out your trend lines, okay? So you bring out your trend line like so, you connect it from the bottom, and then you draw it all the way to the upside as far as you can possibly go, okay? Sorry, this is just acting up. And just extend it from behind and just take it forward. Okay? You understand that? So first things first, we identify the trend. Next thing, we look for the lowest points and then we join them. As you can see, we have 3 solid significant points. At this point, the market is trading at 1.0662. Okay, so this is the dollar CAD, as you can see. Now, we've identified the trend. We've been able to slap on a nice trend line. The next thing we want to now look for is potential support and resistance areas. So I'm just basically going to scroll back and try and look for potential areas of support and resistance. Now, this is not exactly easy to find, but I like to look for the most immediate strong key levels, okay, that might most likely hold this market. So I think I like this level, okay, maybe slightly higher, slightly lower. Okay, you know why? Because I see a cluster here. I see something like a pushback here. I see a failed break here. I see a touch here, a touch here, a touch here. Maybe if I look back, I'll probably see more touches. Great. So, mind you, we've been able to identify the trend. So, identify the trend. We know that this market is a bullish market. We want to look for buy opportunities. So, we've also drawn the trend line. And we've also been able to identify a potential support level, which is, we've been able to identify a resistance level, because as you can see, anything beneath this level is known as resistance. So we've broken the resistance level, we've tested it. So this area, as long as we're trading above this area is not acting as support. I'll take that again. Once we break a resistance, test, and we break it. Once we break it, remember, once we break a ceiling, it becomes a floor. Okay, so now anything trading above here is going to identify, or rather it would basically treat this level as a support level, whereas if we're trading beneath it, it would treat it as a resistance level. Okay, so when you get upstairs, your previous ceiling of your living room now becomes the ground of your bedroom. So that's basically the idea. So now we're trading above here and we want to look for potential buy opportunity. So first things first, we've identified the trend. Second thing, trend line. Next thing, support, as you can see about here. Now, last but not the least, we need to bring out our Fibonacci level. So this is where the impulse leg starts from. So I'm going to draw it all the way like so. Okay. So I'm going to actually try and extend this properly before I do that. So I want it to start off here, walk into the future somewhere about here. All right, guys. So the idea basically, so now this is the formula, guys. This is everything you need to know about trend trading. Okay, your ability to combine these 4 tools together to know where to buy. Now, don't forget the idea. Don't forget that we're going to be using between the 50 and the 61.8. This region is going to be our buy zone. This region right about here is going to be our buy zone. Okay, so we're going to be looking for an area whereby this support / resistance, trend line, and Fibonacci all come together. An area where they all, so the idea is you want to put these 4 key technical tools together, okay? And that area, guys, you want to write this down. That area in which all this, you know how you're drawing a graph on your linear equation graph, back in high school, yeah. I believe most of you taking this course have been to high school. So you know how you're drawing in and they expect you to find where point X meets point Y. Okay? It's very simple. You would have plotted all the points in point X and you'd have drawn a straight line. You'd have also plotted all the points on point Y and you'd have drawn a straight line. Basically, the intersection between those two lines on the graph is exactly where you want to be interested in. Okay, now in this case, this is a buy situation. We're looking for buy opportunity. So I'm gonna basically move to the right hand side to see exactly what happened. So as you can see, this market comes into this area. I'm gonna map it out. So this area entirely is, just do this and push this all the way to the inside. Okay, as you can see, this market comes into this area of confluence. So we have Fibonacci, we have trend line, upward trend line, and we also have support area. Okay, just take this up a little bit. And as you can see, the market comes into this region, this blue region that we've mapped out really nicely, and then the market starts to head all the way to the upside. So I'm just going to take this out and I'm going to extend the trend line so that you guys have a better understanding of what exactly I'm talking about. Actually, I should extend it from here. Great. Okay. So as you can see, this area right here, this area is known as your confluence zone. Confluence right here. Confluence. What do we have? We have trend line, we have Fibonacci. Remember, the rules of Fibonacci is that we draw it from swing low. Just put this swing low properly so that you know what I'm talking about. Swing low, swing high, pull back, in between. So you can see how all these tools are coming together really nicely. Okay, it's coming together really nicely. Okay, you can see how these tools are coming together really nicely. Okay, really nicely. And you know, we come into it and then the market starts to fly. Oh, look. We start to fly all the way to the upside, So ladies and gentlemen, this is how you combine both tools together. Okay, I'm going to break that down for you again. First things first, you want to identify the trend. It's an upward trend. You want to wait for the market to start correcting and start pulling all the way back down to the downside. And then you want to pop up your trend line, okay? Low point, you probably have 3. Sometimes you have 2, sometimes you have 3. So you see 3 low points, you join them together and then you just extend the line. You also want to look for the most immediate resistance that this impulse leg broke. Okay, this impulse leg, so we tested this resistance once, tested it again, and then we came back and we broke it, tested it and started trading above it. This area is resistance which has now turned support, and most likely when the market gets here and wants to stall and wants to pull back. So this is the market. This is how the market works. Okay, we need to go up, come back down before we head higher again. Okay, so you know this area once broken, we will most likely come back and test it. Okay, come back and test it. Same with the trend line. The market always likes to test the trend line, and Fibonacci works like magic. So when you put these 3 tools together, these 4 key indicators, when you put them together and then you have an area where all of them come together, ladies and gentlemen, that's your no-brainer buy. This will work out 98% of the time. Once you're able to identify this, I call this the Willis zone, okay? Yeah, I call this the Willis zone, so I'll just pop it up for you right about here. Okay, so this is known as the Willis zone. Too small. Good. So this right here, ladies and gentlemen, is known as the Willis zone. Okay. So Willis zone is equal to confluence zone. Willis zone is the area where you have support or resistance, trend line, okay, and Fibonacci all coming together. You remember I drew all of them individually, how they should be drawn. And then I waited for the market to come into an area where all of them were together, sat together. Now, you know the reason why the market respects areas like this? It's not because you're the best trader in the world or because you're the best at drawing these things. is because you're not the only person looking at that confluence zone. By the time every trader in the world is drawing their own indicators, their own trend line support, their support and their Fibonacci, they'll realize that, okay, you understand, our tools all come together at a certain point. As long as the market, as long as it's the same chart, okay? If you look at this chart and I look at this chart, sorry. If you look at this chart and I look at this chart, yeah, you realize that we both see the same thing. We both see this, as long as it's the same price, we both see the same thing. So if we plot our trend lines properly, support and resistance properly, and our Fibonacci levels properly, you would realize that our confluence zones will be at the same point. Same with your math exam, okay? Your math teacher sets your question for you, okay? She expects that your points must come together at a certain place. She's done her own. She knows where it comes together, and then she gives you the task. Here are the variables. Draw each of them individually. If for some strange reason you draw them and it doesn't match in the same place, that means you did not plot those levels individually properly. But the moment you all plotted those things properly, you realize that no matter what you do, those key indicators must come together at the same place, and it must be the same amongst all the students in the class. Same thing with trading. Okay, once you all are looking at the same charts, okay, most traders all look at the same chart at the same time, they put the same tools on, they will get the same confluence zone. And because you all are getting the same confluence zone, you realize that there are a whole lot of buy orders, because everybody sees, it's a buy opportunity, everybody's buying. While everybody's buying and you're buying, you know what happens? This is exactly what happens. The market starts to push all the way to the upside. This is the power of the confluence zone. So ladies and gentlemen, I hope I've been able to cover this chapter to the best of your understanding. If you do not understand in any part of this first very, very important part of the course, please feel free to take a note down, write it down. When you get to have a one-to-one with me, probably on the maybe 13th or 14th chapter, that aspect of the course is set aside for one-to-one. So you have 2 sessions with me, one-to-ones. Bring it up again, I will take it back from scratch and I'll explain to you bit by bit. But in the meantime, ladies and gentlemen, this is all you need to know. This is all you need to know about the key technical indicators we at Western Sahara use. We have been able to use this to extract millions and millions from the market, literally millions. We've made so much money from this market just by using these 4 key technical indicators. As you can see, you can't see any what's called moving averages. You can't see any oscillators. You can't see anything. I remember this trade very well. For those of you who watched the webinar that led you guys to this course, you hear me talk about the story behind this particular trade, okay? This particular trade made a lot of money off this trade. This trade is also similar to it's the S&P 500. It's a very similar trade to this that I go over in the webinar, okay? So, ladies and gentlemen, thank you very much for attending this aspect of the course. Get ready. We're going over into what they call trend reversal. So I've been able to teach you how you should get into a trend, what the trend looks like and all that. But how do you basically know when the trend is about to spin around, okay? How do you know that, it's time to stop buying? Because the market doesn't trend forever, okay? The markets do not trend forever. They do not trend forever. How do you know when to be like, okay, see the Willis zone, really nice. So how do you know when it's time for you to stop buying and stuff like that? So I'm gonna take you over to the next aspect of this course. Now I'm going to be talking about trend reversal. All right, guys, thank you for also being here this long. I appreciate that. That means you guys are absolutely enjoying the course. All right, see you in a bit. All right, cheers.